So the question was, how do I analyze the companies and how do I select which companies I am going to invest? So there are two things. First is that the fundamental analysis of a company will tell you whether you should buy the company, or I mean buy the stocks of that company or not. And technical analysis will tell you when you are supposed to buy that company. So those are two different things, what and when. Uh, in this video, let's focus on what to buy, or how do I judge the companies whether they are good for my portfolio or my long-term portfolio or not. So what I do is I go to Finviz, whether it is trade or invest, everything in Finviz. I go to screener and I click on this market cap field. So all the largest companies are getting filtered. As you can see, Microsoft is has the highest market cap today on June 19, 2025. Next is Nvidia, next is Apple, Amazon, Google, Meta, etc. So then let's suppose that this is a Christmas time and I'm preparing a new list for what I'm going to invest in 2026. Then I'm going to go and open majority of these companies in a new tab so that I can drill down on each of them. I'm going to just select maybe 10 or 12. Um, okay, let's just say 13 for example. And then I go to first company, let's say Microsoft, and then I come down. And the first thing I look is how much the revenue that they are earning each year. And my first eye goes in the 5 years, have they doubled their revenue or not? That is my first question. So in 2020, Microsoft's revenue was 143 billion. So roughly it needs to be close to 286 in 2024 or 2025, and it's there about, but it's not there yet. Of course, it's very difficult for mega cap companies to grow their revenue 20% each year because they have grown that high. Um, so it uh, Microsoft by default does not qualify for my first criteria, which is it has to double their revenue. And why I focus on doubling their revenue is because doubling their revenue means that they are growing 20% or more each year. Apparently, Microsoft is not, but that's okay. They are almost there or round about there. Um, the second thing I would see is whether their revenue is growing each year. So as you can see, each year this building block is growing. Third thing I see is whether their profit is growing each year, which is also the case. Um, there are other things that I look. If I do like the company, then I drill down here and then I look for other parameters, whether their gross profit has a good enough margin or not, they have a debt or not, how much they pay in the taxes. There are other things that comes into picture, but that only if I like the company and I want to invest in that company. Then I drill down more and more before I pick and say, okay, I'm going to invest in this company. So unfortunately, Microsoft does not qualify to be in that bucket because they did not double their revenue. So I keep aside. It's not that they are bad companies, it's just that it does not fit my criteria. Then I go to next, which is Nvidia. Again, this has shown some crazy growth. Uh, as you can see, from 16 billion in revenue, the double would be 32. They are now earning 130 billion, which is mind blowing. That's why it's everybody wants to be in Nvidia, no doubt about it. Um, but here is a word of caution, and this is what I'm going to probably analyze in 2026. Um, that why I would not put Nvidia in the top 10 companies or the next 20 companies is because this growth that they have shown in the last 5 years, it is unsustainable for the next 5 years, which means the right now the stock price is assuming that they are going to have that similar growth pattern. Unfortunately, nobody in the world can do this kind of growth. I mean, they can, but it's highly unlikely. So 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 that's, but again, we have time for that. But for now, obviously, NVIDIA qualifies my first criteria. It qualifies my second criteria. It qualifies all criteria that you could think of. So it's the best company to have in your portfolio, no doubt about it. Whether I want to put more money into it now is a question. So then I go to third company, which is Apple. Again, you can see it. They were earning 274 billion in 2020. They are nowhere near 20% growth after 5 years. Their revenue is just about the same each year in last 4 years. Their profit is roughly about the same. So I would completely avoid having Apple in my portfolio. Um, Amazon, again, it probably is not doubling their revenue, but again, like Microsoft, they are growing each year. They are growing each year in their profit too. So I would keep it aside. It's one of the company that I probably want to invest for next 10 years. It's going to last for next 20 plus years. One of the best company. Every time there is a dip in this company, I would like to buy more and more in the Amazon. Again, I'm not saying when to buy. That will be the second session in the video. But what to buy and why to buy is what I'm trying to say it in this video. Again, the next is Google. Google is the same. It's growing well. It's unfortunately not just there in my double the criteria, but it's almost there. I would keep an eye on that. Meta is also almost there, just maybe a touch missing in that criteria. Avgo is also there, but here is a concern in Broadcom. As you can see, in between 2020 to 2023, their profit was growing, but look at 2024, their profit did not. So there is a bit of concern there. So I would avoid. TSM is another company which doubled their revenue, doubled their profit. It must be there in the investment. And one other thing about TSM, guess what? It is not part of the S&P 500. So if your 401k is in S&P 500, you must invest in TSM. Why? Because it's not part of S&P 500. So yes, there is a risk involved because it's an international company. Anything can happen in Taiwan. They are opening a factory in America and other places, etc. But the important thing is your money get diversified. So if you invest in S&P 500 through SPY, BOO, or any other fund, uh, this is one of the way to diversify it, because uh, this is not the TSM is not part of S&P 500. Um, Berkshire is another one I would avoid totally, because it's not doubling their revenue, their profit is not growing. Tesla, their revenue did grow from 30 to 90, but look at their profit, it shrink. So a bit of caution. JP Morgan did double their revenue and also the profit. So if I have to pick any bank, although I don't like to invest in the bank, I do like to invest in fintechs because the growth is phenomenon. I avoid investing in the banks because their growth is kind of capped. But if I do, this is the best of the bank, and it qualifies my criteria. The next is Walmart. It grows its revenue, but roughly not there to double their profit or double their revenue, so it will not be part of it. So that's how I look at each and every companies. I go through this list. Probably I go through the first 200 companies line by line, and then I pick and choose the companies that I know, and then I filter it, and then I select what are the top 10 companies that I should invest in next year, then the next 20, and so on. But that's how the logic is involved, or how my mind is trying to filter out what to invest and what not to invest. Thank you for listening.